On paper, Bitmine looks like a value steal, a price to book around 1.2x, but the company simultaneously reports large losses and a negative return on equity. At a 100 times increase in authorized shares, 500 million, 50 billion, a 4.2 million ETH treasury, a big $200 million strategic splash into consumer/creator fintech, and a 90-day slide of 42.9%, and you've got a story that's part treasure hunt, part dilution cautionary tale. Why investors say, on paper it's cheap. The market often turns to price to book, PB, when a company is essentially a balance sheet play, i.e., it holds valuable assets and investors want to know whether the market price reflects that net asset value. Bitmine's PB of roughly 1.2x makes the headline sound simple. Market price is almost equal to book value. For asset-heavy businesses, that's sometimes a screaming bargain. But the devil lives in the details. Think of PB like the sticker price on a used car. It tells you how much people are paying relative to what's recorded in the garage ledger, but it doesn't say whether the engine is about to explode or if the tires are shot. But the company isn't profitable. Negative ROE is a red flag. Price metrics alone mislead when the company is burning through capital. Bitmine's reported negative return on equity, ROE. The user-provided figure here and multiple data services show large negative ROE figures, signals that shareholders' equity is generating negative returns, i.e., losses. That matters because PB equals 1.2 only helps you if the numerator, market price, and the denominator, book value, are reasonably stable and the business can convert assets into cash-producing operations. Negative ROE says, we're not demonstrating that conversion. Sources tracking Bmnr's financial ratios show ROE well in negative territory. It's like a gold mine with no miners, lots of value in the ground, but no production. You can own a claim, but if the crew keeps burning cash trying to build a mine, the paper value doesn't mean much. Growth versus losses. The split personality. Analysts point to a bullish growth narrative. Bitmine's revenue is expected to grow rapidly. Forecasts suggest very high year-over-year revenue growth percentages. The company's story is that it's pivoting into building an Ethereum-anchored treasury and monetizing that, staking, running validator services, MAVN, and pairing crypto assets with consumer platforms. But actual trailing financials show that losses have been growing extremely fast. User-provided note, losses up greater than 110% annually over 5 years. That creates a gigantic wedge between optimistic forward-looking models and the brutal accounting reality. If you buy the bullish view, you're pricing the company as though future cash flows will be huge and materialize soon. If you buy the skeptical view, you treat today's cash burns as evidence that management hasn't yet proven it can turn ETH holdings into reliable revenue and earnings. Either way, the current market price, recently near $28.80 per your note, is pricing a lot of future good things. Third-party analyst aggregates show a wide range of opinions and price targets, reflecting this split. Imagine a lemonade stand that suddenly has rights to 100 franchise locations and a warehouse full of lemons, ETH. If those franchises actually produce lemonade sold to millions, the business is worth more. If it spends on billboards and gives franchises away, you get diluted gains. By the way, if you are getting value from this video so far and want more like this, please like the video. It means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The ETH chest, 4.2 million ETH, huge, but volatile. Bitmine's disclosed crypto holdings are jaw-dropping in scale, roughly 4.17 to 4.2 million ETH in filings and press releases, which, at current ETH prices, translate into multi-billion-dollar headline NAV contributions. But crypto is very volatile, and accounting/treatment matters. Whether tokens are marked to market, staked, locking them up, or used as collateral will affect both liquid value and risk. The company reports sizable staked ETH and a move to launch its MAVN staking network in 2026, which has implications for yield but also for liquidity and regulatory scrutiny. Metaphor, owning millions of ETH is like holding a warehouse full of rare wine, priceless if demand keeps rising and you can resell without crashing the market, risky if you need to sell large volumes into a thin market. Chairman Tom Lee and management tried to reassure shareholders that the expansion of share capacity is a strategic tool to accelerate the ETH accumulation and launch MAVN, among other uses. But assurances only go so far. Investors watch the SEC filings for actual registrable shelf statements, S3 transfers, 8K notices, or specific follow-on offerings. Those are where issued shares materialize. Until then, it's optionality, and optionality that can be used for value-enhancing deals or for dilutive financing. It's like being told you've been granted the right to print coupons to a theme park. Great, but who prints them, how many, and who redeems them will decide whether you get more visitors or a printer meltdown. Institutional moves, sovereign advisors, and the analyst chorus. Some institutions still bought stakes. For instance, sovereign advisors reported a new stake of 160,057 shares, $8.31M, in the third quarter, SEC filing/market filing. At the same time, sell-side coverage is mixed. B. Riley trimmed its price target from $90, $47, keeps a buy. Cantor Fitzgerald initiated coverage with an overweight and a $39 target, and other shops offer hold/buy mixes. Market consensus averages, per market beat/aggregators, sit in the low to mid $40s for targets, reflecting both optimism and caution. That gulf of analyst views underscores the narrative split. Some believe the ETH story will create massive NAV. Others worry that execution/dilution destroys per-share value. It's like two weather forecasters. One says, sunny growth, and another warns of dilution thunderstorms. Both may be right over different time frames. Best case, the bakery that scales. Management issues some shares sensibly to fund yield-generating validator infrastructure, MAVIN, seals a profitable partnership with the Beast Crew or other distribution, and ETH valuation rises. Per-share NAV and future cash flow both increase. The stock re-rates higher. B-roll, pizza pan expands, then more pizzas come out of the oven. Plus more institutional buyers could hit Bmnr to $2,500. Note this as well. God tells us in Daniel 7 verses 25-27 that, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.